Good afternoon, EasyEquities users. My name is Veronique. I'm Head of Education here at EasyEquities. Thank you so much for joining us this afternoon. We've got Nilan, our Head of Training, joining us, co-CEO of ARC. Johan van der Merwe. Domini is also here from ARC. So this is such a fabulous opportunity to share some information with our users. You know, since you guys listed on the JSE, we've had more than about 150,000 of our users invested in ARC, and about 80,000 of those shareholders remain on the platform now. So thank you so much for joining us, Johan, Gerrit, and Nilan.
Thank you.
Thank
Good
you.
evening.
Perfect. Okay, so before we jump into the details of the delisting, let's talk about ARC itself. It's a phenomenal company. So tell us about what makes ARC such an amazing company, and what's in the portfolio at the moment that our clients should understand.
Yeah, thanks, Veronique. Yeah, maybe I can start by saying it was something that Johan van der was CEO of Sanlam, and I was CEO of Sanlam Investments. When we thought we were overstaying our welcome at Sanlam, we spoke to Patrice and he said, but let's start something, something very special. And he really wanted to start something which is a bit of a disruptor in the market. And if you think about our portfolio, we've got two distinct areas. The one is really financial services, where we try to build more of a holistic business where businesses actually leverage of one another, and it's a whole ecosystem. The other side is what we call diversified investments, and those are where empowerment is really necessary in those businesses, but they kind of like standalone, less synergies perhaps amongst them, but still areas that may be the disrupting. And if I talk about disruptors, if one looks at Time Bank that we started, it's digital bank, financial inclusion. If you look at Rain, which is a data provider, much cheaper than anyone else. If you look at A2X, which is a rival to the JSE as a stock exchange, that we started. If you look at companies like Capital Legacy with wills and trusts, etc., it's really for the people that weren't included before. Also Empowerment. And then maybe lastly, the one I can think about now is Line Booker, which is really what I call the Uber for transport, which is really a disruptor in the whole transport business. So those are the type of things that we try to invest in. Obviously, some of these and many of them, were kind of like startups and very early stage. And I think that's where the market kind of like difficult sometimes to see, the light at the end of the tunnel in terms of that. But, it took us a time for some of them to come to fruition. Another issue, and I don't want to come to the issues of the listing now, but as we know, most of our investments, and I think about 90% of them, are unlisted investments. With us being listed as ARC, the market wants to know what's going on. But many of our unlisted investments see it as a competitive advantage that they're not listed. If you look at Time Bank, the whole market is coming to us and they want to understand Time Bank and what's happening there. Time Bank says, yes, I don't want to really open up all my strategies, my plans, my tactics, etc., how to compete in this market, because I'm unlisted. I don't need to do it. But because you're a shareholder of mine, now you want me to actually share it. And it's difficult for us. We can't share it without, the underlying companies give us, their approval. So in that sense, I think the market is always looking at this, or they looked at it and say, well, we can't get all the information we wanted. And that created a bit of an issue around the listing as well. But it's a very exciting portfolio, but mostly unlisted and obviously then a bit up on the risk curve as well, versus, normal listed companies.
Perfect. Okay, well, you started touching it on there. I mean, you're deciding to delist from an exchange. It's not a small decision to make. So why now? What's the rationale behind it? And what does the post-delisting structure of ARC look like?
Yeah, so I think that's important. I mean, obviously there's a reason why we listed. We obviously raised funding in the listing. And it was kind of like 50% came from Patrice Motsepe and these different structures, and 50% was raised from the market. at that point in time, we chose a jurisdiction to be Mauritius because there were quite a number of international investors that wanted to invest, and they liked the Mauritian structure into Africa, so to speak, much better, and that's why we chose that, and it worked well. It's still listed on the JSE, but the jurisdiction was Mauritius. Then what happened over time, and we even a bit disillusioned with that, is that we understand and we always also expected that the market will trade us a little bit at a discount, like all investment holding companies. I think that discount for the market in investment holding companies actually increased over time. And then our own was trading at quite a significant discount to what we thought is the net asset value. But we stuck with it, and we said, you know, maybe if we prove to the market that every time we sell an asset, that we sell it at the net asset value or more, which we duly did as well, then maybe the market will realize, but you know, we're actually putting them at a huge discount to net asset value. But every time they sell something, they sell it at net asset value or more. So maybe we should believe their value. And but that also didn't happen. There were also quite you know, a bit of criticism on the fees. And we, from day one, was very open about what the fees are. And we said, after 5 years, we're going to reconsider the fees. Because to start a business like this, you have to raise the funds, you have to do all the due diligence on investments, then you invest. Once you become a little bit more mature, where we are now, we did relook the funds, and we decreased the fees quite significantly. We probably halved the fees than what we had in the beginning. And you know, there was a little blip in the share price, and they liked it, and then afterwards the discount was there. So over time, one has to then start questioning yourself whether it's the right thing to do. And I have to say, we've been questioning it for the last 3 years, and only pulled the trigger now and said, you know, it really doesn't make sense for us. You know, at the end of the day, when we had cash, we always looked at investments and said, you know, what's the best investment we can make? And that's why we also bought back, you know, quite significant number of shares. So much so that if one looks at it, between Patrice Motsepe's own structures plus different trusts and what we call family and friends, it's about 80% of the shares are now held within those different parties, and then 10% held by the PIC. So the actual free float out there was probably just under 10%. And then, you know, it becomes difficult for people to follow it. There's not much volumes in the market, and the tradability becomes an issue. And I'm sure you guys will talk to that as well. So that's really the reason why we decided to delist.
Okay, yeah. And post the delisting, like what is the structure? What does the structure look like?
Yeah, so I mean, besides the delisting, part of all of this is also redomiciliation from Mauritius back to South Africa. As I said in the beginning, the main reason was for international investors, because they're not there any longer. You know, we have to. We thought, you know, it doesn't help to have another cost structure there to have it there. We brought it back. In the interim, there were also certain tax changes for, especially for international companies, what they call foreign controlled entities, which increased the tax on it. But then, you know, we will. But that's not the main reason why we're coming back. It's really, you know, we're a South African company. We're an empowerment company. We want to be. We did it for very specific reasons for international investors at that point in time, and that also fell away. So besides that, so the company will remain as is at this point in time, just not listed, and the structure will just not be a Mauritian structure. It will be all SA listed. Although that will take another 6 months to happen.
To finalize. Yes. Okay, perfect. So, like I said in the beginning, we've got about 80,000, you know, investors in ARC on the platform, and I suppose it's. Some may ask, is this not a bit of a kick in the teeth for retail investors? So what would be your message to those investors to kind of, you know, negate that?
Yeah, it's a very good question, but I think not. I mean, we really appreciate the support we got from retail investors, and especially I think the EasyEquities is a very interesting and you know, plays a big role in for retail investors in the country. I would hope that many of those retail investors bought the share at the lower levels, and the fact that we proposing an increase, if one look at the average over the last year, it's close to 100% premium that we're paying. Not at the last share price, because everyone was kind of like expecting this is what we're going to do. So the share price did start moving, but a year ago the share price was probably very close to R5, and we're offering 9.75 at this point in time, which is the top end of the fair and reasonable that we got from outside consultants. And I hope that people got it in lower, and that they can take that money and go and invest elsewhere with EasyEquities as well.
Fabulous. Okay, well, I mean, a big part of why we're having this is education. The investors need to be educated on their options. Tomorrow on our platform, 10 a.m. is the deadline to decide. Do you want to remain a shareholder in ARC, or are you going to take the offer? So, do you believe that taking the cash offer is the better offer for retail investors? And if so, what is your reasoning behind that?
So, Veronique, quite a number of friends ask me that question as well. And it depends on how much you have. I just say to them, to be a very small investor, and I say so because it's only the 10%, and then obviously the retail investor is going to be a portion of that 10% that we're making the offer to, in an unlisted vehicle where you don't know what the liquidity is. It is kind of like difficult to follow. If you want to sell, maybe you can't sell. Maybe it's a good time to sell now because it's up, but then you don't have any buyers, or the buyers only want to offer you a price which is a much bigger discount to net asset value, and you say, but I need the cash now. So, unfortunately, maybe for us, I think it's better for retail investors to take their cash and invest it elsewhere. I think there are lots of other opportunities in the market. Hopefully some of our underlying investments, like the Time Banks or Rains or Line Booker, they will come to the market, and then they will be listed as a single entity and not an investment holding company, and invest in those. But at the moment, I think it won't be wise to be in there unless you really don't care about liquidity. And you say, listen, even if I have to wait 20 years, I want to stay in here because I think it's so good, etc. But I think there would be very, very few people that argue that way. I think it's better to take the money at this point in time, and I think it's a very fair offer. And as I say, I hope investors got in much lower than what we offer.
Okay. Well, let's get into some of the nitty-gritty there. Neelan, I'm going to come across to you. Let's say we have some clients that decide, actually, I'm okay with waiting 20 years, or whatever their reasons are. They decide to remain invested in ARC. What does that look like on EasyEquities? Can you see it on the platform? Can't sell it on the platform? So over to you. What happens once it's delisted?
Thanks, V, and thanks, Johan and Gerrit, for joining us and making the time for this discussion. I think it's incredibly important to share the knowledge, certainly with our client base. As you can see from the numbers, I mean, it's a large bunch of clients that have access and have had faith in the company and have invested in the company. So it's definitely well appreciated that you're spending time going through this process. To chat about sort of delistings, perhaps, from a more generalist point of view, what essentially happens is we're saying that the share leaves the exchange. It enters, a delisted space, which in effect means you hold an unlisted share. Now, to understand the impact of that, you actually need to understand the functioning of a listed share so that you can understand what you actually taking away from the market. And there are a few things, and Johan has touched on many of them already. Liquidity being perhaps the primary sort of factor that feeds into many other facets of the market. For example, something like price discovery. Is a share adequately priced? And we say that, if there's sufficient liquidity in a free market, buyers and sellers on the back of supply and demand will find a fair price for the share. There are anomalies in that, sometimes where liquidity isn't great. And like Johan said, free float is a big consideration. Free float simply meaning how many shares are available out there openly to the public to buy and sell. Liquidity is defined as the ease at which you can get in and out of a position. So how easily can you buy and sell a share? if you can buy it and can't sell it, typically a lack of liquidity manifests in a wide buying and selling price, which we call the spread. So, if the share, for example, is, let's say, trading at 10 Rand, and that's where you can buy it, quite often in an illiquid share, you can only sell it at 8 Rand, for example. That spread represents a cost to shareholders. In a very liquid share, you might be able to sell it at 9.98 Rand, so 2 cents versus 2 Rand. So that's how it manifests in terms of liquidity. The fact that the free float on AIL, which is the JSE code, which is ARC, is only 10%, means that there's very little liquidity already available. So the offer is largely to minority shareholders. The other important consideration, I would say, specific then to this deal, is obviously the lack of look-through for purposes that Johan has mentioned already. Many of the holdings that ARC has in its portfolio is not listed, so there's no look-through to actually look deeply into the unlisted entities. That also can distort valuations and makes it difficult to understand what prices the sum of these assets should be priced at. So that's another consideration. The third perhaps is around the cost, right? It's expensive to be listed. Whilst it normalizes the playing field in terms of regulatory oversight and perhaps reporting responsibilities and stuff like that, it is expensive and sometimes doesn't actually make sense. Ultimately, when you start operating in the OTC market, which is over the counter in the unlisted space now, let's say the delisting goes and you decide to hold the shares, what are they actually worth? Because if you don't have that active pricing mechanism and price discovery mechanism, which is the market, could they be worth 5 Rand? Could they be worth 6 Rand? And as Johan said, somebody could offer you a ludicrous price, and there's no real science besides to ARC themselves understanding what that value is. So the process, like now, you would simply just log in, hit the sell button, and get out of something listed. The process is very different. The shares have to be removed because they're not offered in electronic format. There's potentially share certificates that need to be posted out. So you're actually going backwards. This is where we came from share certificates to actually go to electronic format. So you're kind of going back quite a few years. And then, somebody asked, I mean, how do you value these things? And if you don't have an active, live, realistic price, you can't value it, is the reality of it. And in previous examples, one would have to contact the issuer either by email or telephone, and try and arrange a price or try and arrange for them to buy it back. It's a very cumbersome process. You'd have to then sort of take the certificate over to the issuer and say, hey, listen, I'm knocking on your door. Here's the certificate. You promised me this price, and try and facilitate that very manually. So it becomes a mission. Okay.
I suppose bottom line is you're not going to be able to go to your EasyEquities account, push sell, and sell shares at the end of the day. But now, I mean, are there certain tax implications if you're now invested in an unlisted company? Are there tax implications that people who choose to remain invested?
Yeah, tax is an interesting thing. I mean, it is largely dependent on sort of one's tax domicile sort of residence. Gerrit, maybe you can clarify if through the move from Mauritius because I mean Mauritius is quite a tax-friendly venue, and we do have a double tax agreement with Mauritius. But does that affect when you bring it back into SA? Will that affect shareholders and will there ever be a sort of capital gain event triggered through that move?
So there's two tax events that's of consideration here. One is in the event a shareholder decides to sell his shares, that will be a tax event. This is not a buyback that comes through as a dividend. This will be a full disposal. So if you do select to take up the offer, that will be a taxable event, and that's based on your individual tax circumstances. So if you're an individual, there will be capital gains tax. If you're a company or a trust, that it will be depending on your jurisdiction of registration. From a company's perspective, there is a tax consequence as a result of the redomiciliation, and it's also detailed in the circular. effectively, because we are currently, the tax structure is a Mauritian-based structure. It's effectively seen through the fund as a Mauritian taxable entity. By repatriating those assets to South Africa, there's you bringing the assets within the sphere of the tax South African tax realm, and that results in not a day one tax event. So there's no cash that needs to be paid to SARS as a result of the redom, but we'll have to recognize a liability for future taxes, because if we now dispose of the assets within the ARC fund, it will trigger CGT, whereas in the Mauritians environment, it would have been tax-free. So we do create a liability on day one, and that's also detailed in the circular. It's about 790 million liability that we need to recognize on day one. And part of the offer and the redom, combining the two, is giving shareholders a price which is attractive, while not having to force additional liability onto shareholders at this venture. So that's part of the reason why we're combining these two corporate transactions.
Amazing, amazing.
Just to mention on that one, that's a negative part of the redomiciliation. But what happened in the meantime is that there used to be a 5% withholding tax of any of the investee companies paying dividends to the holding company, which is Mauritius. That was increased in the interim years to 20%. So it's an extra 15%. And by bringing it back to South Africa, obviously, companies that receive dividends, that's tax-free. So at least that's a saving on the other hand as well. But, obviously, because of the early stage nature of many of the businesses that we have had, we've had quite significant dividends from certain companies, but others haven't started paying the dividends. So it's more a future benefit rather than a benefit on day one.
Amazing, amazing. Well, look, guys, we wanted to keep this short and sweet. I think we're just about wrapping up. I'm going to come to each of you for final words. But before I do that, just thank you so much for spending time with us. We've got over 1 million active retail investors on the platform. They're smart, they're keeping themselves educated, and it's just, thank you so much. And if you could just share a final word, and then I'm going to close off with some details where the video is going to live. So Johan, final words for our users.
Yeah, Veronique. So, it's actually a kind of like a sad day for us as well that we've reached this stage, and we really tried to convince ourselves for a number of years, let's remain listed. It's going to change, but we didn't. And eventually, one had to face the facts and say, it just doesn't make sense for us any longer. We are very grateful for people that supported us, that showed a lot of interest in us, and hopefully, as I say, some of these underlying investee companies will list, and hopefully people can then participate in those going forward. Thank you very much.
Fabulous, thank you. Gerrit, do you want to give us a final word?
Thank you. No, Johan has covered most of it. Thank you to EasyEquities and its shareholders, and for like we said, bringing access to the markets. There's previously unserviced, and I think EasyEquities has always done an excellent job with that. So thank you to you and your team.
Thank you. Thank you. Neelan, one last little word.
Yeah, just a quick one. Look, if you're following your portfolio closely and your investments closely, it's going to be quite difficult in holding delisted shares, right, to value them. As a personal preference, my idea is always to see what things are worth sort of instantly, rather than sort of hold the unknown. But just listen, it's entirely up to shareholders and investors to make that decision. But just be aware of the timelines, right? It's quite tight. The notification went out last night. Many people asked why last night. Well, yesterday was the LDT, so it was only 2 shareholders who held them as of close of business yesterday. So we were governed by that date, and so we sent it out last night. And you have a deadline, 10 a.m. tomorrow, I believe.
Yeah. Okay, amazing. Thank you so much to all you fabulous EasyEquities investors. Thank you for joining us. I've seen your questions coming in. So this YouTube video, this recording will be living on our YouTube channel. It's going to be up tonight, so you can rewatch it. Education is obviously a big thing for us, so check out our blogs. We've shared some blogs on delistings in general, on ARC's delisting. Check out our blogs, check out the Easy Academy, do the Thrive lectures. This is what it's all about. Nobody can tell you what to do, it's up to you. But we hope we've given both sides of the story, whether you choose to remain invested in an unlisted entity, or you choose to take the offer, make sure you get it, you reply to the email by 10 a.m. tomorrow. And when I share the video, we'll also share the winner for the 1,000 Rand, EasyEquities voucher. But yeah, I think that's it from us. Thank you so, so much for attending, and good luck with the rest of the delisting. I hope it goes smoothly, and all of the best for your future endeavors.
Thank you.